Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts.
Hey guys, it's James with the Chart Guys. It's Wednesday, March 7th. Going to do my nightly video on oil. So as I said in last night's video, oil is really in a consolidation phase. It's in the equilibrium pattern. It's just in a range between this recent high of 66 and this recent low of 58.07. So we're just ranging in there on the weekly. And what I would look for, again, if I'm swinging this, would look for a bear break of the low of last week of 60.13. And if I was to swing at bull, I would look for a bull break of 64.24. And you can see this range on the daily chart being played out. Daily chart is getting tighter. We're in equilibrium. We have a high, a low, a lower high, higher low, lower high, and so far a higher low. And so if I was playing bear oil, I would look for a break of 60.58, 60.58 tomorrow, and then again look for that break of where's that weekly? I think that lines up with that 60.13. Yeah, it does line up with that 60.13, the low of last week's candle, and this daily candle line up. That was the consolidation low of this recent consolidation of 60.13. If it breaks 60.13, then I'm going to look for further downside and swing it for maybe a day or two. So we'll see what happens. For the bulls, they want to now break above 63.28. For the bears, they want to break below 60.58. Looking at the 4-hour, it's not really showing me much. 4-hour for the bulls. First resistance on the 4-hour is going to be 62.58 if you're looking for something before the daily resistance. And then, let me see, looking at the hourly if there's any resistances. Same as a 4-hour, 62.58. So, yeah, people were asking me, well, why did oil turn around so badly where it had a pullback, then it had a nice bull move, and then a huge pullback. And that's just because I expect oil to trade within this range here, between this high and low for some time until I either see a break of the low of last week or the break of the high of last week. I really expect it to just trade in range for some time at this point. So you're going to see the volatility during the day. It could easily change directions during the day. So keep that in mind, that it is trading in a range, and it's going to be a little more difficult to day trade it. You'll have to be quicker because of the equilibrium pattern. If you do think that there is going to be a continued equilibrium pattern on the daily play out, what I would do on this situation here is, because we're getting a tighter pattern, if you think that it's going to be an equilibrium pattern, then I would have taken it down here, oil down here for a bull play, and the stop would be the stop here would be the break of today's low of 60.58. If you are already in a swing trade, absolute must stop would be at 60.13. And if you're in a swing trade bullish, you want to see a break of 63.28 here to set a higher high on the daily, and then a big test at 64.24. So again, I'm expecting oil to just trade in tighter range, and we'll see which way it breaks as this equilibrium chart on the weekly and the daily play out. Have a good night, and I'll see you tomorrow.